You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/the Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is time to rock out once again with your friendly neighborhood option block all-stars. I am the leader of said motley crew, Mr. Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we know so, the Options Insider Radio Network. You guys know how to get at us. Mondays and Thursdays, noon Central, 1 p.m. Eastern, via the old Mixlers. After the fact, pretty much wherever you find your finer audio programs. So it could be your Google Podcast, could be your iTunes, could be your Pocket Cast, your Dogcast. We don't judge. However you get it, including our mobile app, which has everything baked in there. I've been hearing some great stories from people lately who say all they do is listen to our stuff. And we certainly will keep you occupied if that's what you need. We will give you the content, 12 years worth of shows here on the network. The app's got it all baked in there. You can find larger degrees of archives here or there on the website, of course, as well. The newly revamped website is a good place to go for all that goodness as well. So let us know. Let us know how you consume it. Let us know how many shows a day you're taking down. We'll have to crown a champion out there. Should be fun. Speaking of champions, let's see if we got some joining me on the program today. At the very least, maybe not champions. Maybe we have first, second, maybe third place winners. We shall see. Let's find out. Spin the wheel. Let's go all the way out first. Oh, we're landing first in the most uncomfortable of hot seats, a.k.a. the Fidelity Hot Seat, where we are joined once again by Mr. Colin Songer from the Active Trader Strategy Desk. Colin, welcome back to the show. How's the seat? Is it too hot? Are you squirming over there?
I'm squirming a little bit, yeah. Well, we'll see what happens.
That's good. That's good. If you weren't squirming, we weren't doing our job correctly. You know, you got to squirm a little bit. Otherwise, it's not the hot seat. It can't hold on to its namesake, its title. All right. Speaking of titles, we call him Uncle around here. He is Uncle Mike TOSAW from St. Charles Wealth Management. I don't know if that really counts as the title, but we'll add it on anyway. Uncle Mike, put that on your business card. Uncle Mike TOSAW, St. Charles Wealth Management. How's it going, sir?
Going well. Yeah, it's funny. So the only uncle that I am is I have an uncle as an in-law uncle, but I don't have any true nieces or nephews on my side of the family. So very ironic.
There you go. We have bestowed uncle status upon you regardless. So there you go. Life works in many mysterious ways.
I feel honored and blessed.
You should, sir. You should, very much so. And last but not least, when you're talking titles, they don't become more prestigious than the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, do you have that on your business card, sir?
The rock lobster? No, but I probably should. Maybe I should start tweeting as the rock lobster just for the heck of it.
You should.
Just for the heck of it.
You should say the most prestigious rock lobster. There we go. Add a little bit extra gravitas to it. All right. We've got a very, very serious, high gravitas level panel to join me today on the show, listeners, to help me dive into all the fun stuff on the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what's going on, what's trading, what's lighting it up. And come into showtime, it started off kind of lightly to the downside, but it seems to be picking up a little bit of steam as we move on into the start of the show here. Most of the major indices off 0.5%, if not more. The NASDAQ leading the charts to the downside, off nearly a full percentage point at this point. S&P and Dow both a little bit north of 0.5%, about 0.6% out there. Gold also taking a little bit of a relaxation today, off about 11 handles. Crude up slightly, still about 56.25 in WTI. We'll get into all the gold and crude stuff and a little bit on TWIFO coming up later today. Got a good guest on that one too, so stay tuned for that one. But it should be fun. And of course, all this red means VIX cash bouncing, rebounding from its, shall we say, flirtation with the dark side earlier this week, threatening to break through. It may have, I'll have to check, it may have broken through that 12 handle ever so briefly, but not, as they say today, listeners, up about a 1.25 handles, back north of a far more respectable 13 handle at about 13.35 coming into showtime. That still puts it down about a handle from where it was this time last show. We were at about 14.25 this time last show. So up, or I should say down still from there, but up from the depths, the nadir of earlier this week. VVIX, like we said, when you start getting down to close to the 70s, watch out. Things might start happening. VVIX moving a little bit again, up about 3 handles from our last show, up to about 87.5. Our old friend VXX continuing to erode. We'll see how long that lasts. It was down about 0.5 point coming into showtime. We'll see if that continues. But let's go back. Let's go back around the way we came here. Let's start over there in the land of the most prestigious of rock lobsters. Sir, first off, confirm for me, did we break the 12 handle this week in VIX cash?
Oh, yeah.
We did.
I think it was one tick. We traded like 11.99.
Yeah, something like that. I knew
for
it was
like
so briefly.
A very brief second. Today, I was looking, I tweeted something out. We have this little skew product that we're trying to get all squared away. But there was a lift and vol this morning pretty early. So I don't think they were happy with Draghi's comments that monetary policy alone can't fix everything. Surprise, surprise, surprise. So that means governments actually have to start doing something. A la Greece, maybe even, You have to take the heat before you can, before you can kind of right the ship, so to speak, but more market-oriented government policies. I kind of am reading between the lines there from him, but it's sounding like his ammunition, his gun is getting a little empty. And I think that's part of the reason why SPX is backing off. I thought everybody think, more monetary policy. Woo, it's going to keep it going forever. And now it's, at least from a vol point of view, it created a bit of a pop for volatility. We'll just see how much. I think people are still waiting for the Fed to come out. But, 12 was the low tick of the year, low closing tick, I believe, yesterday. So, unless the news continues to stay Gaga-esque, or go-go-esque. No surprise that the vol came in, and Tesla not having great earnings. I don't know if it's a market bellwether, but it's kind of a sentiment thing. Everyone kind of likes it when that stock's going up and things get a little rosier. So, and that stock took it on the chin. So from a vol point of view, There was heavy future contango into yesterday. Those VIX futures were still like in the 14.5 range. So they're moving up a little bit today, but not near as much as VIX's. So the future traders, once again, we're waiting to crash those futures, and they wisely didn't do it yesterday, even though volatility dropped to, I'm pretty sure, like a year low yesterday. So a decent place to, close a couple of your VIX puts, stuff like that. But I think really ultimately everybody's waiting to see what the Fed does on next week. And that's the market we're in, so that's what you got to wait for. But unfortunately for TOSAW, he doesn't get to say his favorite line.
No favorite line today. Yes, we all are kind of feeling the effects of what's going on the ECB. Kind of it's a precursor, a prelude, if you will, to the domestically focused, obviously, the Fed over here. That's what everyone's really waiting for. That's the big dog. So, yeah, so maybe today's comments, today's events, maybe I'll have to check later on and see how our Fed Watch is doing in terms of what they're expecting. I got to imagine they're still expecting the quarter point, but maybe some of that half point love that had snuck in there, maybe some of that is going away. I'll have to go check. We'll check that on TWIFO a little bit later, listeners. But you mentioned Uncle Mike. Uncle Mike, sir, you can't say your thing. Your almost ubiquitous thing you almost get to say every show these days. But what else is on your radar today, sir?
Well, I mean, I could kind of modify it a little bit and say yesterday, but I can't do that because we did hit the all-time highs again for a little bit yesterday. But going away from it for now, just like when Walter Payton broke the all-time rushing record, he actually lost it the next play. Not a lot of people know that, but then he gained it back, of course, later in the game. Anyway, today is interesting in that it's an everything down type of a day. So in other words, stocks, bonds, and commodities are all coming down a little bit. So in other words, just looking at the S&P, of course, down just under 20 points. We have TLT down roughly 74 cents on the day. So the long-term treasuries are down a little bit, as well as my beloved silver and gold. Those are down as well. So oftentimes when you see this happening, it's usually there's a little bit of fruit basket upset going on here. I don't know if you guys have ever played that game, but in that the money will appear somewhere, usually in the next day or two, because the money's going away from all major spots right now. So it's something that I always find it interesting when we have days like this, just to see which of the three categories the money shows up at the following day or the next couple days. So that's one of the things I'm looking at right now. Of course, we have a little bit of a pop in the VIX today with the markets coming down. The other interesting thing about this as to what we're seeing and just some of the price movement of it is that going into the day-to-day, we were actually higher on the futures. So in other words, up until, let me bring it up one moment, on pre-market, we actually, on SPY, we actually hit the 302, we were actually at 302 at about 7 a.m. Chicago time. So in other words, we're actually down 25 points off the high from where we were in pre-market. So we were actually on pace to continue from yesterday, but then the before market we actually came down, and then we were roughly at even from yesterday when the market opened, and then of course we've been down the day-to-day. So an interesting day from the standpoint that we have a lot of movement in the overnight market. Of course, we have earnings that I'm sure we'll talk about a bunch today to watch, as well as the Fed, and a lot of things going on.
Look at you providing some perspective for these types of market movement. How dare you, sir? How dare you provide rational perspective on a program like
Rational Perspective? That should be the name of a webinar we do sometime. Rational Perspective. I like that, Mark. Another great marketing idea.
There you go. I'm full of them. Who wouldn't sign up for a webinar called Rational Perspective? The hottest of topics. It's up there with box spreads and all that other sexy stuff these days that the kids just can't get enough of. Speaking of what the kids can't get enough of, Mr. Colin, I got a feeling when we do our Fidelity breakdown, I just call me Karnak, if you will, but I got a feeling the kids can't get enough of some of this Tesla downside actions. That was lighting it up over there in Fidelity land today, sir?
Wow, it's almost like you knew what was coming up, like there was a theme.
You can't see me in the studio here, but I have like a cool hat on with a gem and I'm holding an envelope to my head. It's really good stuff to predictions over here.
It's impressive. It really is. So, actually, when we take a look at the orders by customers, Tesla is actually the leading candidate right now. So Tesla's down to 227.62, down a little over 14%. And this is obviously from the earnings release that came out. Right now, price is sitting below the 200-day moving average, but it's kind of squeezing between that 20-day and 50-day. So right now, price is sitting between those. It's below the 20, but above that 50-day moving average. So when you take a look at the option statistics that we have for it, and we look at the volume call to put ratio, right now it's for every one call that's being traded, there's one spot, 2 A puts. And when you compare that to the 90-day average ratio of one call to 1.16 puts, so a little bit more put volume going on today than compared to its average. And then the next one, once again, you're going to see the theme. Facebook. Once again, earnings season. Right now, Facebook is selling off as well. It's down to 199.37, so just over 2.5% down. It's holding above all its moving averages. Right now, it is really close to that 20-day moving average. It's right at that level, so it is kind of putting a little pressure on it. And, this is after it intraday creates a new 52-week high. When you look at that, going back to our options statistics and look at that call-to-put ratio in regards to volume, you see that's 1.96 calls to every one put that's traded. Now, when you compare that to the 90-day average volume, the average is somewhere around just over 2 calls to one put that's traded. Now, to kind of break away from the earnings theme is Boeing, even though Boeing just recently announced earnings. Right now they're trading at 346.44, so it's off about 4%. And right now it's below all its major moving averages. When we look at the option statistics, the call-to-put ratio is right now 1 spot, 1 call to every put being traded. And when you compare that to the 90-day average volume, which that sits at 1 spot, 2 A call to every one put. So a little bit lighter on the call activity for today. When we go to our next candidate, it goes back to our theme, which is PayPal. PayPal right now sitting at 116, just off 4%, a little over 4% here. And PayPal itself, the price has gapped down between the 20 and 50-day moving averages. It's above the 50, but below the 20, but it maintains above that 200-day moving average. This is obviously with, they may have had an earnings beat, but they lowered their revenue guidance on that. When we look at the option statistics on that, for the volume call put ratio is at 1 spot, 4 call to every one put traded. Now, when you compare that once again to that 90-day average, it's the 90-day average sits at 1 spot, 7 1 call to every one put traded. So a little bit lighter once again. And lastly, Ford. Since we talked about Tesla, let's talk about Ford. So Ford making the bottom of the list here with their earnings announcement. They're trading at 9.51, which is almost just under 8% down. Price right now has gapped down below its 20-day moving average. It's 50-day moving average, but right now holding up above that 200-day moving average. The volume call to put ratio for Ford sitting at 1.65 call to every one put traded, which is a little bit lighter when you look at its 90-day average having a 1.7 call for every one put. So that's what the Fidelity customers are trading so far today with that earnings theme.
Thank you for that, sir. And, listeners, if I sound a little shaken, a little disturbed, thank God this isn't a video show, because the Rock Lobster did just turn on some video while Colin was talking, and it was my eyes. I can't go back. You can't go back. You can't unsee what you've already seen, listeners. So I will try. For your sake, I will try to struggle on, but I'm a little shaken here as the show progresses. Let's see if the markets are still shaken here. Let's go to let's see what's VIX land. Actually, since I'm mocking the Rock Lobster, I will give him a chance to redeem himself here. Because VIX Cash, or I should say VIX Options, putting up some numbers, Mr. Rock Lobster, today, which kind of made me scratch my chin and say, kind of like you were doing earlier with a lot of scratching. Do you have any reasoning behind this explosion of VIX Options volume today, sir?
Well, I think we were in here. I was getting a lot of floor chatter today from our floor brokers. They're thinking the whale is back. Remember the guy? What do they call him? 50 Cent?
Yes.
I think right now he's like 40 or 30 cent or something like that. So definitely he is buying some stuff. Somebody's buying some stuff. VIX August 20s, I think the open interest is over 400,000 contracts. And that ain't nothing. So a pretty huge, just a massive number of contracts.
Man always liked himself some upside in VIX land. Yes.
Yeah. It's an enormous number. I'm looking at 428,000 contracts. So I think that guy alone has driven the weren't we just talking? VVIX was at the lows of the year a couple of days ago.
Yes.
And lo and behold, 3 days later, somebody comes in and buys a gajillion contracts. So 400,000 contracts is not a small amount of contracts. That's a lot of Vega involved. So what's interesting this time is really XIV is dead and SVXY is dead. So I'm part of this too is looking at seeing how responsive the vol futures are to everything. And I have to say, we're looking at this like going, wow, the futures had stayed bid this week. They dropped down a little bit because VIX crashed. But just as I look at it right now, everything is starting to pick up a little bit. I don't think they like the Draghi comments, to be honest. Yesterday, after the Mueller testimony, there was no smoking gun. I think that helped drive VIX down. There was really nothing new. And then Draghi today says monetary policy really won't work. So I found that interesting. So I think on the face of that, it's just enough to jack vol up. I mean, the market's really not really selling off very much. It's only down 0.5% or something, but it's just enough to get everybody like a little spooked. They were pretty confident yesterday and spooked, and now the whale comes in and buys 400,000 of the 20s, and all of a sudden people are freaked out. So it is. Let's just call it it was a bit of a slap today. So that's what I'm calling it. Today's a bit of a slap.
Bit of a slap. And yeah, size, whenever you come in at Showtime, and this was as it started the show, so I'm sure more have gone up since then, but about 330,000 contracts already on the tape. In this seasonally light time in VIX land, the ADV is only about 4.25 out there, so they've already done almost the ADV as of coming into Showtime. Something's up, and you figure it could be the whale, it could be 50 Cent, our old friend 50 Cent. Sounds like he has returned, or maybe he's 40 Cent. Now, it doesn't have the same ring to it, but he's somewhere in that range. We'll dig more into that tomorrow on Vol Views. Listeners, of course, SPY doing decent paper coming into Showtime, right about roughly half its ADV, which is about what you'd expect. About 1.1 million contracts on the tape. ADV about 2.1 million. SPX, a little bit over 400,000. ADV a little bit north of a million, about 1.2 million. The Qs, 282,000 on the tape. ADV 533. And the Russell with $1.80 on the tape. ADV just shy of about 300,000 out there. Let's look at the top 10 equity options out there. You probably can guess. Colin hit a lot of them. Number 10, good old Ford. We have seen earnings out there, post-earnings now, and 139,000 contracts on the table. Let's just look really quickly, see where our old friend Ford is trading right now. Ford, 9.5 off 82 cents, or about 8%. I didn't get a chance to look at where their straddle was pricing in, but a good move here to the downside, at least size-wise. If you're buying the premium, a little bit of downside, lighting it up here in Ford today. Number 9, good our old friend Beyond Meat. Can't seem to have a down day. Let's see if today is the day. Nope, up 11, almost 12 handles, nearly 6%. They can't get enough of that faux meat. 215 roughly coming into Showtime here. $1.43 on the tape for them. Number 8, Boeing having some bad news again. Our neighbors across the street here, Boeing, 164,000. Think about having lunch there today, so we shall see. 164,000 in Boeing land. Number 7, we've got, looks like this might be a newcomer to the top 10, at least for a while. I don't think we've seen this one before, at least in the top 10 in quite some time. This is, they're ex-div, that's why. Blackstone Group going ex-div with 179,000. On the tape today, 97% of that. Go figure, on the call side. How could I possibly have known that? Number 6, Apple, 191,000 on the tape. Number 5, Netflix, $1.98. Number 4, Bank of America, 200,000. Number 3, Snap, 285 on the tape. Numero dos, Tesla, not the number 1 spot today. No, Apple only number 6. When's the last time you saw that? Tesla, number 2, 486,000. And number 1, good old FB, also post earnings. Over 500,000 contracts on the tape, 552,000 coming as of showtime. And I'm let's disregard Blackstone with that 97% calls because that's nonsense paper. Let's move a little bit farther. Let's see, in the top 10 outside of that, we've got, looks like Bank of America with 70% of the paper coming on the call side of the ledger. That's the most biased flow we're seeing today, of legit flow. I don't count the ex-div stuff. So I guess if you take out Blackstone, Intel's actually the top 10 today with 138,000 contracts on the tape. My old stomping grounds. We do have some more popping off. Let's see today, of course. Big day. Amazon, Alphabet, Intel, and WWE, of course. Tomorrow, Twitter and McDonald's. Let's just see really quickly. I have the report. Yeah, let's see if I have all the earnings move reports. You can find them on theoptionsinsider.com. I just want to see if I can find Ford for us here, listeners. I don't have it here in front of me. Of course not. But you can find it, theoptionsinsider.com. See what they were pricing in versus this roughly 8% that they delivered here to the downside. Meanwhile, let's keep on rolling. Let's get a little weird. Let's get a little odd. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. Let's kick things off with Siri. No, not the much maligned Apple digital assistant. Excuse me. Just mentioning it brings cough to my throat. I'm sure, hopefully, I didn't trigger all of your Apple devices in your room. But no, I'm talking about Sirius X, and I wonder if they've given that ticker any second thoughts after the launch of Siri on Apple. But that's a conversation for another day. Coming in today, showtime about 6.22, up about 12 cents or so, nearly 2% for this resident cheapie here. Let's see, a year ago they were trading $7.20, so pretty much exactly a buck north. And then they sold off. The low of the year was about 5.25, so they had pretty much a two-handle range, almost exactly a buck to the north and to the south of where it is right now. So it has exactly bisected that 52-week range here, coming in here at 6.22 right now. The low, 5.23, and the high is pretty much 7.20. Looks like 7.29, so close to it. So we're right pretty much in the middle of that range. And let's see, the recent low was recently. It was in June, about a month and change ago. So hit about 5.25, yeah. So it's bounced off that, a nice run, a buck to the north since then. Let's see what the flow we discovered today here. Siri actually lighting it up today, Mr. Rock Lobster. Someone's got an axe to grind for size out here in Sirius XM. One of the bigger, might be the biggest individual equity option print going up today, outside of our friend Fiddy, of course, in the indexes out there, in the equity options. 25,000 of the AUG 6s going up for 31 cents. Now, it's kind of weird because this one went up, it says 31 cents, so they went up on the bid, but that's, A, it's only a penny wide, which seems pretty tight for these calls, and B, there were some other prints going up for these as well. So these markets are a little bit screwy. We also got a 5,000 lot going up for 32 cents. Let's see, these actually went up before the other. So it started with a 6,000 or 5,008 lot, I should say, for 32 cents when they were 30 cents at 31. So someone paying through the offer. So obviously those spreads a little bit funky as these size prints are going up. Total volume for size, though, nearly 40,000 contracts going up today. Looks like paper goblin here. Let's see what our old friend, the Flow Master, he's got some color on this. He called it serious call buying. See the pun? The Flow Master. What What a clever fellow he is. He says the AUG 6s went up, paper buying them from 23 cents to 34 cents with a volume weighted price of around 32 cents. OI, pretty negligible, only 3,500 contracts. Worth noting, there is earnings coming up in this cycle. Earnings are on the 30th before the open, so coming up next week. So, Mr. Rock Lobster, this guy's putting his money where his mouth is. He says, the heck with buying a $6 stock. I'm buying all the options, and I'm having them expire next month. What's your take on this one, sir? Someone's got some love for some SIRI.
I think the Flowmaster has the funny going with the serious call buy.
Who knew he was so punny?
I've seen him speak several times. He is quite witty when he wants to be. It's that New Yorker wit, I think. This is like a stock that never goes anywhere. Isn't this the one like they gave Howard Stern a billion shares? And
yeah, he pretty much watched it. I don't think he hedged it. He pretty much watched it all go to naught, right?
Something like that. So I'm not really crying any tears for him because I'm sure he's doing okay. But somebody is serious about this stock. What can I say? They want all the upside. I mean, it is what we'll just call a high gamma call. So I think even the Viceroy wouldn't mind this one. But as of right now, is it making any? Yeah, it looks like it's not a bad purchase. I mean, so somebody wants this thing, and I'm just looking at the open interest right now. It's a pretty good size OI. I'm looking at the term as of the August 9th, August 2nd. So it appears that somebody wants some of these calls in a big way. So, and we'll see what happens. But serious call buying pre-earnings. So we'll see if the darn stock can actually move anywhere. But this is historically the stock just doesn't do a whole lot. So maybe this person will go home sad, and that'll be that.
You have a $2 range over the course of the last year, so it has done a little bit of over the last year, and we're
I guess so. I guess it can move.
Kind of in the middle of that range. And the Flowmaster calls it serious, so we got to pay attention to it. We got to put it in the to be watched column. We shall return to serious, sir, for more pun action. Are you ready? Can you handle that?
I will.
Now we're hitting serious. So what's next? Of course, is DOMTAR. Everyone's favorite DOMTAR. Actually, we're coming back to this one, too, if it sounds familiar. It's because we talked about it not quite a month ago, about 3 weeks and change. On the 1st of July, we highlighted this on the show. It was some put love in DOMTAR Corp. Everyone loves DOMTAR. Ticker symbol UFS. If you're wondering what the hell is DOMTAR, they are the largest integrated producer of uncoated free sheet paper in North America. So put that in your pipe and smoke it, Mr. Rock Lobster. Free sheet paper, uncoated. Doesn't get sexier than that. I mean, come on. They're the literal Dunder Mifflin of the world. From office infamy. Today, trading 42.17. Remember that number. It's kind of interesting. Because back on the 1st of July, we highlighted some put love out here to the order of 1,812, which is pretty sizable for DOMTAR, of the July 42 half puts going up for 60 cents. These things are pretty wide. They were 30 cents at 60, and someone came in and said, yeah, I will have all of them you can give me on the offer. This was opening on the Philly, took them down for 60 cents. Earnings are on the 1st, but this is not an earnings play, obviously. This was something else entirely, because the stock on let's go back to this year here. There we go. That's a little easier. It's the stock on the 1st of July closed 44.34. So these were pretty far out of the money when this print went up. And then this guy was on the money because the stock pretty much did nothing but go down since the print. They closed on expiration at 41, pretty much around 41 and a quarter. So these were handily over $1 in the money. So these 60-cent puts went out well north of $1. The interesting thing is, and actually the stock the day before expiration hit a low, I think about near 40 and a half. So they were pretty much $2 in the money at one point. So these things worked out pretty well. I mean, for a near-term put, this guy got about as good as you can get. He got a multi-X return. The weird thing is, I don't think he took it, Mr. Rock Lobster. Coming into expiration, there were still pretty much 2,000 of these puts open on this strike. The big positions in DOMTAR on expiration day were 5,000 of the July 35 puts, which I'm sad to say were a bridge too far, and then 2,000 of the July 42 half puts. So both of these were open, and neither of these closed out. I looked at the paper that day on expiration. It was maybe like a 10-lot trade. That was about it. So seems like these bad boys were pretty much open. Yeah, they traded over about 2,000 on the first, and that was kind of the big day. Other than that, they traded like 50 lots and small stuff going into expiration. So there wasn't a lot of change. So someone, looks like Mr. Rock Lobster, they put these puts on for a decent amount of size. They paid up to do it. And then they kind of did a whole heck of a lot of nothing. They watched these puts pretty much go out. So either they wanted to sell themselves some stock, which, if that's the case, they succeeded, or they wanted to get size short, I guess. You don't usually see it. You don't usually people taking their puts into expiration, sir. The calls sometimes, but the puts, you don't usually see that. Does that surprise you, sir?
It is surprising me a little bit because, you think maybe they bought some stock or something. I mean, but very timely. This isn't odd. It's essentially Dunder Mifflin, right? So,
exactly.
Where does that stock go? Like all those guys, they go out, they sell the paper, I mean, where is that stock going? So, whoever this was, let's just call him very timely. Very, very, very timely.
Yeah, who would have expected such precipitous downside in Dunder Mifflin? That's exactly what we got here. So well-timed, and yet... So, yeah, maybe he was too well-timed. Maybe he got frozen. Maybe that's why he couldn't close them out. I don't know. But it is odd to see these puts go up so well-timed and then naught else happen on the other end. Again, he could have wanted to sell some stock at those levels. So he bought the option for the intended purpose. And so he used it for said purpose. So he just, he could have done a little better if he had maybe sold them somewhere around the lows there. C'est la vie. Crazier things, like I said, the stock right around 42, I think, and change today, 42.15, I believe it was. So yeah, they're back up from that low of where it was, but still, those puts still in the money if they still existed today. Let's go on to another name. This is the name that moves a bit. Also, kind of a resident cheapie now after kind of the beating it's had. This is GoPro. Remember they launched, and a lot of brouhaha about this one. And a lot of people were, including myself, were kind of scratching their heads saying, they're cool, they do good stuff, and for a very select niche, they are very useful and valuable. But, in this day and age when the camera phones are getting so good, and it's not like these are that much cheaper than a decent camera phone, that, these are $500 or more for some of the higher end ones. So you drop these, you're still going to be pretty upset about it. It's not like you can buy them and throw them away. They're not disposable. So this action cam niche, I kind of wondered how big it could be. It seemed like the market kind of has agreed with that. But they've had a bit of a turbulent year. Ticker symbol, of course, GPRO. Coming into today, 534, up about a dime or so, a little over 2%. A year ago, they were trading about $1 north, 645, and they hit a high of 764, so almost over $2 north. Looks like that was around October. Or actually, no, I take that back. That was recently. That was back in May. So yeah, in October, they hit 730 or so. Then they kind of hit it again in 720 in November. Then they sold off hard into the nadir around Christmas Eve. Hit 404 on Christmas Eve, listeners. So well south of where they are right now. Then they kind of had a nice run. They rallied all the way back up to 6.25 by a little after Valentine's Day in February. They were trading 670 by mid-April. So they had run pretty good. Then they sold off again down to about 5 and change, 580 or so. And then they rallied all the way up to their high of about 764 in mid-May, May 14th. So they had a nice little run, and they kind of sold off from that high again. So it's kind of almost looks like the chart of kind of a crazy biotech or something, where it's kind of just vacillating all over the place for the better part of the last year. So yeah, they were more than 2 handles higher just a few months ago. Now trading 534. They hit their low of a recent low of about 503 back on the 19th. So yeah, not been a good short-term run here for GoPro, all on the downside. So maybe someone's got some love. Let's see. Oh yeah, it's calls. It's AUG6s going up for 15 cents today, listeners. 75 hundo of these bad boys. Again, these are 14 at 15. These are opening over on the NAM, the NASDAQ options market. Say that 5 times fast. That's a fun one. Nom nom. But Rock Lobster just threw me off today with that video. I'm not on my A game. Let's see if I can recover. But also worth noting, a big block of stock going up against this one, 188,000 shares, going up at 523 as well. So Mr. Rock Lobster, they got earnings on the 1st, so there is some earnings juice baked in here. We got, looks like a bit of an earnings swing at the bat here. 6 handle, 15 cents versus stock at 5 1/4. What's your spidey sense telling you about this one? Obviously, our friend here, he wants it to move. He wants it to go. He wants GoPro to go. Look at that. I made a pun myself. Not just the Flowmaster can do it.
This is one too where GoPro they've never really gotten their footing after the IPO. Remember they had the stock was like $90 and it was hard to borrow. It kind of reminds me of Beyond Meat, where everybody just shorted the crap out of it too early and then it blew up in everybody's face. I think Beyond Meat's kind of a little bit like that, although it seems like they're like making sales. Dunkin' Donuts is going to, sell Beyond Meat bacon or something like that in your breakfast sandwich, because that Dunkin' Donuts breakfast sandwich is already so tasty. Let's make it better. But anyway, what I would say on this one is somebody is looking for. There's always possible for these little stocks to pop. I do like these kind of junk options in these sort of beaten down stocks, because these are the kind of things that could have a pop. The only problem is just the timing is not. The timing is a little close for comfort on this one, but you're looking at how it's trading, and it looks like it was such a tight market. It's kind of hard to figure out what they did on this one. I'm pretty sure they must be buying it, but maybe it's a little. Not an easy one to totally figure out, but I guess they're buying the options and looking for, some kind of great earnings. So they got a shot, but it does look like a long way for GoPro to go in a quick day or two.
Yeah, it's a weird one. Doing these delta neutral is kind of weird too. There's a lot of weirdness to it, but then we saw it just in the Dunder Mifflin one that even these weird names can move sometimes, and then you can do nothing with it, like our friend did there. Let's see what our other friends are up to, a.k.a. you guys. It's Thursday. It's time to check in on the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's dig into some of your letters, old school letters. They don't come by the mail anymore, but the electronic mail, they certainly do. Let's kick things off here. Shedda wants to know. He says, I love swing trading, but I'm struggling. I'm going to fill in some grammar here for you. I have a small account, and I trade options. Oh, the abbreviations. People can't be bothered to fill out a complete sentence on social media. He says, do you recommend 30 delta versus at the money or just trade in the money? Also, 2-week options versus 30 days or 60 days. Interesting. Shedda's got some very specific queries. I don't know how he arrived at 30 delta. Usually it's 25 is where people like to hang their hats, but 30 delta, okay, I'm good with you. 2 weeks versus 30 days versus 60 days. I don't know. This is it's a lot to unpack here. Uncle Mike, maybe we'll start with you. I know this is not exactly your purview, swing trading intraday, but let's have some pity on Mr. Shedda here. He's having a hard time spelling, so let's at least answer his questions. I kid, of course. We love all of you out there, even you of the broken sentence fun. So, Mr. Uncle Mike, let's pretend Shedda is a client. He's calling you up. He's saying, hey, Uncle Mike, I got a small account. I like to swing trade my options. Do you prefer 30 delta at the money or in the money? That's a small account. It's kind of hard to go in the money, but also 2-week options versus 30 days or 60 days. A lot of very specific queries to unpack here, sir. Where do you fall?
I fall all of the above, and here's why. If, let's say that you believe that vol is low and there's going to be a lot of movement, then I believe that taking a smaller position per trade, meaning let's say that you want to risk maybe $500 per trade, then maybe buy an option that would be maybe $100 if you feel that vol is low, because then ultimately you can get a little bit bigger bang for your buck if you're right. But if you're wrong, then it won't hurt you as badly. If it's something to where you feel that vol is higher, but you feel that it should be lower, then I think that if you're looking to do some type of a swing trade, then I think you need to really go down the road of a vertical spread of some way, shape, or form. And if you don't know what a spread actually is, then I don't think you necessarily need to be trading. Now, let's say that you really want to cut your teeth in the option world. You want to do some swing trading and you want to base it on stocks and volatility, time decay. All this stuff just sounds like voodoo craziness to you. Then what I would suggest doing is use a small account, but buy deep in the money options around the 90 delta level. Because then the volatility, time decay, it's impossible for it to hurt you quite as bad. Now, you won't be able to do as many contracts, but you'll do the most similar thing possible to that of being long or short a stock. Remember, sticks and stones can break my bones, but volatility and time decay cannot hurt intrinsic value. How's that for some poetry for you?
Look at you getting poetic. Yeah, he may not like that because, your first blush, small account, it is hard to do in the money stuff. But on the other side, flip side of that, you can't do many, but you're not going to erode as much, if at all. So that's, I guess, kind of weigh your options there, pun intended. Size versus protection from erosion. Just don't go too crazy deep, because then you're just wasting all that little account you got there. Colin, you must get calls all the time along this vein, along these lines, where people want to do a little swing trading with options, but they have small accounts. What do you recommend in these types of scenarios, sir?
I can't top the poetry, though. That's going to be tough to beat.
Uncle Mike on his A game today.
So, I think
just
a lot of
call me
times
the
when it
poet
comes
Lord.
down to it, might have to. That was well put. A lot of times when we're having this discussion, I think it was stated perfectly, which is, look, if you're looking for a big pop or not, having a little bit of a smaller amount of risk on the line by using something like an out of the money. That way, if it does go against you, it's not going to hurt as much, and obviously less money that you're risking. But it also depends on what kind of swing. If it's a smaller swing, you try and take advantage of where it isn't that big pop. It makes more sense to utilize that in the money. So you have that. But once again, that's more capital that you put on the line. Obviously, you want to have your risk management techniques in place. The old question I'll ask myself is where I'm wrong. Being able to identify where that is. And then in terms of utilizing the 2-week options versus 30 or 60 days, I mean, that to me, that comes down to, the time frame you're going to remain in there. The shorter the time frame of the option, more sensitive to price movement, a.k.a. larger the gamma is going to get. But that longer time frame, that does allow you to slow down that time decay, which obviously could be helpful depending on the time frame. But if you're in a shorter time period that you're going to be staying in the trade, even intraday, then why pay that additional premium to stay in that particular trade and have that exposure? So, and all it is weighing those advantages and disadvantages, and usually it will bring you to the right conclusion or the right strike and expiration that will suit that trade.
All right, Mr. Rock Lobster, I'll give you a chance to chime in on that one. I'll also throw in an extra one. It's kind of up your alley, more so than pretty much the rest of us. It comes from Mark Boble. He wants to know, do you give credit spreads picks? And we do not. We do not on the Options Insider. And you guys kind of don't really either at Option Pit, but kind of to a degree. You may be able to help him out. First off, he should write to Mark because he can give him a lengthy explanation why he hates the term credit spreads. What do you think?
I know. Why don't we get him all hot and bothered on his vacation? Get him in a total lather over the credit spread thing.
Yeah, forward him that, and then also a % move of VIX.
Yeah. So, this is not advice, but I did look at some upside spreads in Tesla today, like the AUG. Was it the AUG 2 cycle? Those call spreads looked interesting. I'll just say they looked upside credit spreads looked interesting in Tesla in the August 09s, like the 245. 245,
Easy.
55, stuff
Easy.
like that.
See, you got to go to Option Pit and subscribe to learn more, right?
Yeah. So they were interesting. I'll just say they were, statistically out of the money, but still quite bid. So, probabilities change when vol changes and stocks move and all that. But the vol was pretty high in Tesla after the earnings, which it normally isn't this high. So, you take that for what it's worth, the cost of the show. So as far as credit spreads, do we give recommendations on them? No. I think they can be a good technique. I generally use them as generators of income for something else. So like in the idea for Tesla, that credit spread generated money for a put spread to purchase. So, if Tesla kind of stayed between, anywhere south of 245, the idea was you could probably handle the trade till then. It wouldn't make you any money, but if it did fall apart, the spreads might help. The credit spreads might pay for the debit spread. So that was the idea, since it seems a little bit of the bloom is off the Tesla rose. So I'd say I like them in conjunction with other stuff. They're like a financing mechanism for like a long vol piece, or, because by themselves, the way I think of a credit spread is, you want it to go out worthless. So you want to look for the junkiest, most out-of-the-money, worthless spreads you can find to actually sell. So that's the way I view them. There's a little bit of nuance to selling them, obviously. But, ultimately you sell spreads that you want to go out worthless. So you have to find stuff that you think is going to go out worthless and trade, based on that. Make the investment based on that. So that's right. The first thing, I don't like selling spreads. I think that can go in the money.
He refuses to buy anything. He just wants to use the credit spread. That's all he wants.
Exactly.
So you tell him to use a credit spread to buy something else, and he's out. He's hanging up the phone. He's moving on.
I know, but that's. Hey, listen. He asked the question, so he's going to get the answer. That's what I'm saying.
Here you go. And we're all going to get a little bit of a taste of Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, where we talk about what the heck is around the block for the rest of this week into the weekend. It's earnings, baby. Earnings on the brain, as everyone's, of course, paying attention for the future to next week coming up for the Fed. But this week, it's all earnings. After the bell, we got Amazon. May have heard of them. Alphabet, a.k.a. Google. Intel. We've got the Bucks. Before the bell, we had the old W's. WWE reporting before the bell. It's like market liking what they're seeing out there. Up 5.30, up 7, almost 8%. Back up to 74 and change. This is the one that's kind of been all over the place. Remember last year, WWE was one of the best performing stocks of the year. I think it's certainly in top stocks, not counting weird peak chic biotech stuff. It had done very well with all the licensing deals, and they since have come off. They hit almost a year ago. This is April. Earlier this year, they were trading nearly 100. Now they're down to about 75. So they are well off their highs, but well off their lows as well. So worth noting out there. Also, a lot of insiders I saw just the other day. I think Vince and Triple H, all those guys dumping a bunch of stock of late around 72 and change. Of course, probably all scheduled ahead of time. And now I think Vince has many more shares to go, but still worth noting that not spooking anybody. The stock up pretty hard today. Tomorrow we got the old Twitters and the old Mickey D's. If you like yourself a little bit of burgers going on out there. Remember, the earnings move results reports all over there. TheOptionsInsider.com is the place to go. Click on the options news and articles tab on the top there to find all that goodness. Let's go back around the horn. Let's start with Uncle Mike, sir. First off, how excited were you by WWE's earnings? And then what else are you watching for the rest of the week?
Well, I have a little bit of insider information on WWE. I'm going to make an announcement on the show right now. I'm giving up my financial practice, and I'm going to make a comeback, and I'm going to play at age 41. I'm going to play offensive guard in the XFL that's coming back next year.
I like it. And that can be your name, Uncle Mike, because they don't have real names, right? So just that can be Uncle Mike. I like it.
I'll tell you what, if they give me a contract and I play, that's what I'll put on the back of my jersey just to honor this show.
There we go. There we go. Improbable things all around. I like it.
Yes. No, I think that with WWE, it's what they're doing right now is they are bringing back some of the older names. Stone Cold Steve Austin, they had a reunion night recently. Stone Cold Steve Austin might be coming back, so maybe that's why it's getting a little bit of a surge recently. So it's interesting to watch nonetheless. Still not the wrestling fan that I was back in the 80s. I'm an 80s wrestling historian, though, but not really watching it quite a bit right now. But I think with everything we have going on, there's a lot happening. And vol is low right now, but I feel it's the type of market that VIX could go from the low teens or the 12 to low teens to the mid-20s at the drop of a hat with all the possibilities of things that we have happening right now. So be careful, beware, but on the flip side, it could also stay where it is.
And Mr. Colin, sir, what is holding your focus in the hot seat until we gather here together on Monday, sir?
Fed. So it's going to be really eyeing what comes out with that. And obviously taking a look at all the earnings announcements coming out. So definitely along for the ride, see what happens. I am going to be kind of also monitoring what comes out of the China-U.S. trade talks, seeing what kind of comes out of that. So, there is really a lot coming out. But it's going to be on that Fed meeting and seeing what comes out of these earnings and how the market reacts to them.
And last but not least, Mr. Rock Lobster, when you're not sending inappropriate videos via Skype, sir, what is on your radar until at least tomorrow on Vol Views?
What would the world be without an inappropriate facial video? Clearly, still, I do not know how to use my phone. I think I agree there. We're waiting for the Fed to say something. I think the ECB got everybody a little spooked. I think the MO has been the last few years, okay, if we have, we rallied pretty well in 2017 and part of 2018 until the end. And clearly the market kind of hit a lid with how much the Fed was going to charge for U.S. debt. And now that we remember, we were almost a 3 handle for the 10-year, and now it's like the 2. So a lot of that, I think, still with Europe and everybody else easing across the world, it's weird. I still think the equity market, they're used to the headline news of the easing is good, but I don't know. Eventually, I just sound like a Cassandra, like the party will be over at some point. But as of right now, I think the party got a little worried with Europe's message. They weren't super happy with Draghi's message. So I think it wouldn't surprise me if we saw like a solid rate cut out of the U.S. I'm saying it's possible now. Before I didn't think so, but now maybe they are going to do like the 50 basis points. But I don't know. So that's what I'm looking at. Waiting for that.
I guess we'll find out. Yeah, it's interesting. I want to pull up the old Fed Watch. We'll do it coming up in almost exactly a half an hour, listeners, over there on TWIFO. So if you like volatility in equities, but also crude, WTI and crude, same thing, gold, maybe some of the other stuff. I think pound, or I should say euro dollar, really hot one today as well. So a lot to break down, maybe some rates. We'll get our old cohort, Mr. Nick, back on, and some other special guests as well. So it should be a fun one. Join us in about 27 minutes or so for that. If you're listening live after the fact, just hit the next show in your feed. It should be right there. But before we go, let's go back around the horn. Let's go back the way we came. Let's start with the Rock Lobster, sir. If people want to learn more, maybe our friend here, he wants to learn credit spreads, or they want to follow in his ilk, and they want to come to Option Pit, sir, where should they go? What should they do?
Sure, we actually have something in our store about debit and credit spreads. Just seeing how to price them and getting an understanding of when you're selling them, you really want them to go out worthless. So that's actually an inexpensive item in our store. And if you're interested, send me a note, Andrew@optionpit.com, and I'll give it to you for $17. How about that? So anyway, there you go.
There you go. Deals abound. I forgot that guy's name who wanted it. Let's see really quickly if I could pull it up. It was Mark Boble. So there you go, Mark. Deals just for you. And, of course, for everybody else out there listening Check it out if you haven't done so. Uncle Mike, sir, what fantabulous deals do you have in store for our audience today, sir?
Well, the main fantabulous deal, of course, is if you ever do any type of business with me as a new client, I'll give you a $100 option pick gift card free of charge. But if you're interested in learning more about what we do at St. Charles Wealth Management, feel free to go to my website at stcharleswealth.com.
I like it. So you could go sign up for Uncle Mike, Mr. Bobo, and everybody else, and then take that gift card, get the credit spread one. You already got it discounted. Now it's free. And then you got like $83 still in your pocket that you could burn anywhere you want on the store. Maybe you want to buy a Rock Lobster t-shirt. It's up to you. But I think that sounds like a good plan. stcharleswealth.com is the place to start your journey. You start there because then you get the gift card. Then you go over there to the option pit. You hit up the Rock Lobster. He gives you deals on top of the freebie. It's madness. Dogs and cats living together. Mass hysteria. Get on it. Well, the getting is good. And last but not least, Mr. Colin, the getting is good. Over there in the Fidelity Options land, if folks want to kick the tires and light the fires for themselves, where should they go? What should they do, sir?
Yeah, so if they jump onto fidelity.com/options, they can see all the services that are available, ranging from the tools to help them with their analysis, with charts, option analytical tools, as well as our virtual online classes that we run, 3 to 4 classes a day that our desk teach. So we're also here that you could always give us a call as well at 877-907-4429. You could always ask to speak with any of the Fidelity representatives to help you out, but you could always ask to speak with the trading strategy desk. We're here not only to help educate and coach, but also you can run your trade ideas by us, where we can play devil's advocate for you. So we're here to help in any way that we can.
There you go. Want to hit him up with your swing trade ideas or anything else? Give Colin a call, or maybe Brian, maybe the dad of the last son of Krypton, or maybe the last emperor, any of them. If you ask for those guys, they'll know exactly where you're coming from. But give them a call. It's always fun to chat with them live outside of showtime. Fidelity.com/options, the place to go to learn more. And on behalf of Colin and Uncle Mike and the Rock Lobster and myself, I want to thank all of you out there for downloading, streaming, and subscribing. If you're listening live, we'll be back in a little bit. Otherwise, we'll see you next time for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.